All right, we're keeping our eyes on the markets, and of course that nice rally we saw in the Dow up by about 200 points this morning did fade, but we're getting a little bit of strength. But let's get a little bit more details in terms of what's going on. For that, we're joined by the head of trading at Barometer Capital Management, Avigdor. Dana, good to see you in studio.
Thank you, Ken.
I said to you when you were coming up on the set, I said it must be a quiet day for you to be in studio.
I know.
And that's what it is.
It really is. We're coming into the end of the year, and it just feels like the market's moving. And I know it's been a tough couple of months, but the market's moving away from the fundamentals and more into operational tasks and risk management. So what I mean by that is, you know, the market the last couple of months has been pretty tough. There are possibly some losses. People are managing their tax situation, some gains versus some losses, some tax loss selling. Market's trading technical. Every trader I talk to on the street, my trader at BMO actually mentioned it today, says we're not getting any calls on stock valuations or stories. We're just getting calls on the technicals. Where is the technical of the stock? Where is the support? Where is the resistance? So everybody just thinking technicals. Nobody's putting new money to work. And today it's particularly quiet, even though volumes don't show up as light, especially in a day of headlines. We had the ECB this morning. We have more headlines out of China and so forth. But it's very quiet. And
so what does that mean then for our viewers when you say it's quiet?
Yeah, so it's quiet. So what it means is, like, again, you've seen the range and the indices today. In the beginning of the week and last week, on the S&P, we had 90-point swings midday. That's very big. That's going from a bad open to maybe not so bad, or a strong open to not so bad. It just means that there's no new money, real money, being put to work or being taken out at this point.
Well, you know, there's an interesting stat that I just saw yesterday, which showed that there was $106 billion taken out of the mutual fund industry, 76 going into ETFs. So in other words, there's a gap of $30 billion. Where did it go? Cash.
You know, there is an ETF, maybe you can bring it up, I don't know. It's a ticker symbol SHY, S-H-Y.
S-H-Y,
yeah,
okay.
And that's the really short-term
money market type of thing?
Money market type of thing. You look at the trading volume lately, and you look at the AUM increase. And yes, people have gone to cash. We have Barometer, frankly, as we're very disciplined. In some ways, we're quantitative on the way down. And some stocks that we've owned, we have very disciplined stop losses. And, you know, we got stopped out. And the money, you know, we have some funds, I think last time we spoke, some of them are 20% cash, and some of them are 15% into fixed income.
So, but Diana, what's an example, though, of a stop loss in the sense that, you know, I think a lot of our investors at home would say, oh, great idea. How do I know at what level to put that on? I know we've talked about this in the past, but is it 10% off highs? Is it valuation? What is it?
Yeah, it's not a cold, fast rule. Look, it depends where you are in the cycle. If you bought a FANG stock, really expensive and really away from its support levels, you're going to want stops that you're going to decide, is my stop going to be where I bought it so I don't lose money? Is my stop going to be an X amount that I'm willing to lose or can afford to lose? But the real stop has to be where it breaks down technically, or where you see it's not moving forward and it becomes an opportunity cost because something else is doing better, right? So it depends on your financial situation.
Right.
And it depends on the full portfolio. If you're an asset manager and you have a full portfolio, you likely have 40 to 60 names, let's say. You're less concerned about where you bought it, more concerned about the technicals. But furthermore, you re-buy your portfolio every morning and you recheck yourself. Do I still like this stock? Is it still performing well? Is it not an opportunity cost? Something else is not performing better.
Okay.
Right, because you have to rotate. You only have 60 best ideas.
Yeah.
You can't have all best ideas, and there could be more than 60 best ideas. So you do have to rotate this type of thing. So the stop losses have to be individually thought out, and judgment has to be applied.
Okay, Dana, we have to leave it there. Thank you for coming in. Thank you. That's
Diana
Avigdor. She's the head of trading at Barometer Capital Management.